Good morning. You are watching live daily market outlook for Friday, 25th of May, 2012, prepared by Windsor Brokers. End of the week with problems, standard ones from Europe, from Greece, are persisting with some consolidative action seen yesterday and in early hours of today's session after Euro hit fresh 21-month low at 125.15. However, still negative fundamentals yesterday from Eurozone, negative PMIs that came out below the expectations, showing that outlook for the Eurozone economy remains quite negative and sees potential of further weakening. The only bright point so far is Germany, as today's data released earlier this morning are still showing positive tone, and the consumer confidence in Germany remains stable, as today's GfK data came out at expected 5.7 level compared to 5.6 of the previous month, keeping a potential for further recovery of the German economy. However, that's seen not enough, as overall bloc remains under heavy pressure, and most likely Greece's leave of the Eurozone is so far seen as the matter of time, as no firm agreement made on the recent Eurozone meeting 2 days ago, except a strong suggestion to Greece that rest of the bloc countries would like them to stay together, and of course to follow all the austerity plans and agreements that have been already agreed and signed. Otherwise, the Greece will run out of money in the next couple of months, and that will basically be quite the worst, actually, scenario, as leaving if Greece leaves the Eurozone, then it means that further countries would come in focus, and this would not give any positive results. On contrary, it would be quite negative for the rest of the countries, especially that currently mostly affected by crisis is Spain, and that's it's expected to come next after the Greece. Also, some protests seen in Madrid yesterday and today are now increasing pressure. Today's close of the week and some closing prices will give us some more clues, with the expectations that most of investors will be clearing their positions, mainly shorts, if we are talking about euro sterling or commodities. That might prop some gains of the mentioned instruments. However, nothing significant so far is seen to happen, as negative sentiment with most of the markets remains in play, and keeps as a main remains as a main driver of the instruments, as euro yesterday dipped to 125.15, and last night's close above a previous yearly low at 126.22 keeps quite strong pressure on the single currency, and the possible scenario that is quite likely at this point, as most of the technicals are negative, with also negative fundamentals that I mentioned earlier, keeping pressure and looking for initially test of 125. That is our next downside target, ahead of possible extension in the short term seen towards 120 zone. Quite bad scenario, but according to the current indicators and the previous movements, that would be the likely one in the near term future. As Europe's economic slowdown has hit the engine room of the Eurozone, gloomy new indicators have revealed, adding urgency to the region's struggle to keep Greece debt crisis from tearing the single currency apart. This is what we were talking about at the beginning of the session, with 17-nation Eurozone downturn, as it has been confirmed mainly by its periphery countries, but an index measuring broad economic activity across the monetary union in May showed its weakest outcome since mid-2012 during the previous global financial crisis, as well as PMIs that were released yesterday indicated the core nations such as Germany and France were being caught up in the downturn, even as they made contingency plans to deal with the financial economic turmoil in the event Greece quits the euro. From the other side, Italy, which could be on the front line of speculative attack on euro markets if Greece went back to the drachma, put a brave face on the situation, saying the most probable outcome was still that Greece would remain in the eurozone. This is actually still the main issue and the main driver of the markets, and it needs to be watched closely in order to see what will be the next movements. Regarding today's calendar, a brief outlook as quite tiny calendar. Today, the GfK, German Consumer Climate for May, came as said, as expected, at 5.7%, with a few indicators due to be released today. The Swiss employment level is already out. We still don't have a result. 4.05 million was forecast compared to 4.04 of the previous month release, and we're going to take a look now if we have this release already out or not. 4.04 is the release for today, so lower than forecasted, slightly lower than forecasted, with the University of Michigan from US due at 13:55 today. 77.7 is the consumer sentiment forecast, slightly below 77.8 of the previous release, with the consumer revised the University of Michigan inflation expectations. We don't have forecast. 3.1% was the previous release. So we're going to move now to the our charts and see the latest movements and the possible near future today's expectations. As said, the euro, after a further extension lower and break below previous yearly low at 126.22, extended losses yesterday to 125.15. That so far holds the downside, with yesterday's brief attempt higher stalling at 126.18. So just on approach on our previous low, and now acting as initial resistance and keeping the negative tone as the price action overnight dipped back close to the levels of previous low 125.16. Actually, the level was retested. Beginning of Europe sees some more action higher as the pair heads towards 125.88. That is our initial dynamic barrier at 55 days exponential moving average, ahead of previous high at 126.18, 126.22. So this is basically acting as our initial barrier at this point. On the upside, further up, Fibonacci levels of the recent down move from 128.23 peak of 21st of May sees 126.33 as 38.2% retracement, and basically only break above these levels 126.20.30 would allow for some stronger recovery attempt. As I mentioned, the possible clearing positions at the end of the week might boost euro currency today to some higher levels and allow some stronger retracement. However, negative tone that still dominates on the lower time frames keeps the downside firmly in focus, with the daily outlook showing studies at their extreme points, and this might be signal for some stronger corrective action. However, we need to see a gain of minimum 128.20 previous highs of 25th of May in order to signal some stronger recovery. This is a peak of 21st of May, also near 38.2% retracement of the down move from 132.82 to 125.15. As said, only break above this level. This level would signal near-term base and open way for a stronger retracement. Otherwise, quite negative outlook keeps the downside scenario firmly in play, as basically the pair lost all the relevant and strong support points, and below these levels there is practically nothing towards 120.00. That is now seen as the short-term target for the euro dollar, and the only break above 128 would ease the current bear pressure. The similar situation is seen with the sterling dollar, as it tested yesterday 156.40. That was our downside target, and the strong support mid-February range floor, as well as 61.8% retracement of the rally from yearly low at 152.33 to yearly peak at 163.00 posted on 30th of April. Would likely open way for further weakness, and the 156 low of 12th of March seen next. On the hourly chart, the brief corrective action seen from yesterday's low at 156.38 ran out of steam at 157.25. There was a brief break above 157 handle, where the descending 55 days exponential moving average limited the upside, and so far continues to maintain down move as the price action dipped down to 156.45 zone, and keeping still a negative sentiment fully in play. Loss of 156.40 as said to open next level at 156.00, with today's close below 157 barrier to be clear signal of further weakness. However, as said, some position clearing and short squeeze at the end of the week might give some stronger boost to the pair and push the price higher at the end of the week. Negative outlook seen on the higher, larger time frames too, but already oversold conditions might be signaling some pause in the current down move and allow for a stronger corrective action. On the upside, the very significant barrier is at 158, that is 200 days moving average, and the lower top of 22nd of May at 158.50, and the break above this zone would be good signal for a stronger recovery of the pair. Otherwise, a negative scenario sees a test of 156.40, retest of 156.40, and a test of 156.00. That will open way for a further weakness, and then this, in case of such a scenario, retest of a yearly low at 152.33 would not be ruled out. The dollar-yen's near-term price action remains still positive, as the pair's bounce of recent low at 79.00 still holds the positive tone, despite being rejected at 80.13 at the upside on 22nd of May, as subsequent dip lower found a footstep at 79.20, just above 79.00, with yesterday's push higher approaching 80.00 as our initial target and a strong barrier. Basically, we need to see the break above 80.00, 80.13 in order to allow for a stronger recovery that will open way towards next barrier at 80.38, acts as a 50% retracement of 81.77 to 79.00 descent, and a strong static resistances at 80.60 zone, break of which, and 80.70 as 61.8% to confirm near-term base and open way for a stronger corrective action, as the price action so far holds above, in a renewed attempt above the main bear trend line of yearly peaks, so far holds above these levels, with today's closing above currently at give me just a second. Currently at around 75, 79.70, holding above this level and today's close above here would keep some prospect for a stronger recovery. However, daily structure is still negative, but some sideways tone is attempting to establish, and this could be base for a stronger recovery with the regain of 80, 80.13 and the more significant 80.60 zone required to confirm such a scenario. Otherwise, a retest of 79.00 and a break lower that will open way towards 78.55, 200 days moving average would be the likely short-term scenario. And dollar Swiss in steady uptrend. This morning corrective action is underway, but a steady uptrend of 93.66 higher platform of beginning of this week finally regained our upside target and the yearly high at 95.93, ending the cycle of 5 months from January until today, where the pair dipped from 95.93 yearly low to 89.30, that is the yearly low, and fresh strength that emerged from there. Now fully retraced the recent down move with brief break higher so far reaching 96.04. We need to see the clear break above 96 handle in order to resume the recent very strong uptrend that emerged of 90.41 higher low of 1st of May, and open basically way for a fresh phase higher as the end of this cycle signals possible extension higher. 150 days moving average on the weekly chart at 97.06 along with the 97.00 as round figure resistance is seen as the next upside target with Fibonacci levels slightly away from the current market levels at a yearly high at 97.80, yearly high of 2011, is seen as the next in case of lift above 97, and the 99.49, 61.8% retracement, and the parity level as the next target in case of further extension higher. Back to the lower time frames, over extended conditions and a strong barrier at 96 zone that did not allow immediate break higher have triggered corrective action with the initial support at 95.30 zone now coming under pressure as the price action dips so far to 95.50. Further retracement is not ruled out at this point, as all our studies now are pointing lower with the 38.2% retracement at 95.13 seen as the next target ahead of 95.00 previous high of 18th of May, as well as around the figure support, where dips should ideally reverse in order to keep the immediate bullish tone intact and for possible fresh push higher. Otherwise, loss of 95 and 94.85 that marks 50% retracement would delay immediate bullish action and open way for a stronger reversal with the higher platform at 94.70 as well as 94.60, 61.8% retracement seen as the next target in case of loss of 95.00. Key short-term support lies at 93.66 level, and this is also near 38.2% retracement of the broader rally from 90.41 to 96.04, and basically only break above this level would more significantly harm the current structure and the open way for deeper, stronger retracement of the recent rally of 90.41 to 96.04. The yellow metal remains in the corrective action of recent fresh low at yesterday's, 2 days ago, fresh low at 15.33 when the pullback of 1600 strong barrier found temporary ground just ahead of critical support zone at 15.30.20. Bounce higher have so far been capped by the descending 55 days moving average at 1577. However, still a rather positive tone is seen on the hourly chart as the price broke above two moving averages and still keeping the focus at the upside barrier at 1577 ahead of a more significant one at 1600. Some comments were saying that 16 zone is seen preferred compared to the 15 zone as retest of 15, 20, 30 and dip to 1500 would be signal of a more significant reversal and a further weakness of the yellow metal. However, on the upside we need to see a gain of 1600 in order to confirm near-term positive structure and allow for a stronger reversal. Otherwise, in case of gains being limited by 1600, the immediate risk is seen towards our critical support at 30-20 zone, with the recent low at 1526 posted on the 16th of May to come in focus again. And crude oil near-term recovery of 2 days ago, fresh low at 89.28 is still seen limited upside 91.50 zone so far caps the corrective action with the studies slightly above their midlines seeing potential, and this morning's action seeing potential of stronger recovery. The Iran is close to make a sort of a deal with the U.S. nuclear watchdog, with the next meeting seen on June, and some principles already have been agreed that increases greatly possibility of finding a final deal and ending a current crisis with Iran that basically disrupted the supply of the energy for the Asia and basically the rest of the world, with Asia and Europe being as the main Iranian oil consumers. From the other side, there's still a negative tone from the world leading economies that is showing a further weakening of the economies, that also triggers the lower demand for the energy, keeps the oil price under heavy pressure as the recent sharp decline of the lower top at 106.41 at the beginning of May. We're talking about less than 1 month decline, lost a significant value from 106.41 to 89.28. That is the recent low, with the still downtrend being in play and seeing potential of further extension lower. On the upside, as we said in our previous sessions, regain of 96.68, that is 200 days moving average, is required basically to improve the current very negative outlook for the oil, with the $100 per barrel seen as the next significant barrier. On the downside, 88.54 as a 61.8% retracement is seen next in case of loss of previous low at 89.28. That was all for today. Thank you for being with us and attending our live sessions. Our next session is regularly at 7 o'clock GMT on Monday, 28th of May 2012, and we expect you again to be with us. Until then, we wish you a nice Friday and very nice and relaxing weekend with today's trading to be successful and profitable. Good luck.